guys? TraderJud here, back with another video for you. I know it's been a while since I've been on here. Just for some background information on that, I'm going to say I'm recently back into college, but really I've been back to college for a year now. This is my second semester back in college. I'm officially a senior at the University of Mississippi, or Ole Miss. I'm a finance major there, managerial finance major, and so my first semester back at college, I was making videos, I was being productive, I was doing all this stuff while managing my work schedule and managing, my school schedule and making sure that I was getting assignments done, so on and so forth. And my first semester back, I went through it with some relatively ease. It was relatively easy for me to manage all of those things. And my schedule was designed that way on purpose because it was my first semester back in 4 years out of college, and so my advisor purposely made that first semester a lot easier. It was an easier workload. But my second semester, I was expecting, or halfway expecting it to be somewhat the same, and it wasn't. So, going into this past semester in January, or February rather, I was still making videos and I was trying to manage everything, and I was not making school a priority. Instead, I was making work a priority, and YouTube videos a priority, and trading a priority, and making the gym a priority, and like doing all of this other stuff outside of school, and my grades were reflecting that. And so I had a realization that my priorities were messed up, and I had to really reevaluate where I was. And that led me to pretty much stopping everything that I was doing that I was enjoying, and devoting the time needed into school. So I took a lot. I stopped doing a lot. I stopped going to the gym. I stopped working 12-hour shifts at work. I devoted a ton of time to school because that was what was required in order for me to do well. And I'm fortunate enough that the work my place of employment where I work currently is paying for my education, but the only flip side to that is that you have to maintain a B average in order for them to pay for your semesters. And at the rate that I was going at the very beginning of the semester, I was not gonna be able to do that. And so I really just flipped everything around and started devoting the time required to school to make sure that I was going to be successful there, because that's where it's really important. And I put social media, trading, YouTube videos, I put everything to the back burner. Everything, literally anything that I enjoyed doing in my free time, I put it all on the back burner, and I hit the books. I spent a lot of time studying, a lot of time doing the assignments that were required for me to be successful, and making sure that I was putting in the effort that was required in order for me to be successful. So fast forward to now, this semester is over. I accomplished everything that I needed to accomplish for that semester. It was successful. I recovered everything that I needed to recover, rebounded well, and here we are. So the semester is over, and I'm back to making YouTube videos. I'm back to in the gym, and I'm back doing everything that I enjoyed doing, that I had to pretty much put a complete stop to for 3 or 4 months. I put a pause on my personal life to make sure that my professional life was going to be handled. And so that's the reason for my hiatus up to this point. I've gotten numerous messages from people asking, are you going to continue doing these? Why did you stop? So on and so forth. So I wanted to take a minute to just kind of explain what my situation was. When I put out the video at the beginning of the year for my plans of 2019, I was not, obviously, I wasn't expecting this sort of situation to arise. But I am fine. Everything's okay. Nothing bad happened to me. It's just, life throws you curveballs, and you have to figure out what your priorities are. And I needed to get my priorities straightened out, and so that's what I did. So kind of moving on from that, you'll notice that there is no video attached to this. It's because my desk is covered with school stuff still. As soon as I finished my last final, I got on a plane. I flew out to LA to see one of my best friends, and I was there until Monday of this week, and then I was straight back to work. So I haven't gotten my desk cleared up from all the school stuff that's on it. But I wanted to make this video, and so there's no video attached. There's no levitating face attached to the bottom right or left corner of this video, but that will be returning, as well as what my planned videos were before school kind of got out of hand for me. All of that will be returning later on in the coming weeks. But here is the first weekly charting or weekly outlook series video, and since I stopped doing them because of school. So gonna get back on this. I know a lot of people have been looking for these, and like I said, I didn't want to stop, but I was kind of forced to, just because of circumstances. So we're gonna get started. It's the usual. We're gonna go over 10 pairs. We're gonna go over the 4-hour time frame. For each pair, I'll kind of give my outlook on what I expect to happen. I was actually pretty excited to sit down and get the opportunity to do this. So yeah, let's go ahead and get started. First, we're looking at UCAD again on the 4-hour time frame. You'll notice UCAD has been ranging in between these two zones for quite some time now, for a couple of weeks, few weeks. UCAD does this. It's exactly what UCAD does. It ranges, and then it breaks out. So you just have to wait for the breakout to the upside or the downside. That's just the way that it works. I don't know why these trend lines down here and up here are doing what they're doing. They were drawn on different time frames, so I guess that's probably the reason why. But you'll notice as I zoom in, they kind of jump around everywhere. So I don't know what's up with that. That's a trading view issue, I guess. But just keeping on the 4-hour time frame, really all we're looking for right now is either a breakout of the bottom of this zone or a breakout of the top of this zone, and a retest of the zone before continuing up or continuing down. UCAD can go either direction. I'm not convinced it'll go bullish or bearish. I'm simply waiting for a breakout, and that's it. So that's what I see with UCAD this week. It's a waiting game. I wouldn't trade while it's inside of this consolidation zone or this consolidation area. But if you do, you're accepting the risk that when it breaks out, it will break out fast, usually. Break out hard and fast. And so just make sure that you're using good risk management if you are trading this area of consolidation. USDJPY is up next. We can see UJ has been bearish for a few weeks, and then now we're seeing some bullish momentum. I've got this trend line drawn. I've got a whole bunch of support and resistance levels drawn. We can see that UJ broke out or broke this support and resistance level. So I want to say that we should be expecting this to continue to go bullish. However, it still is in a bearish trend. The minor, yeah, I'm going to say that this should continue to go bullish. The market's literally just opened, so you can see the gap up. I'm thinking that we should be expecting this to continue to go bullish, continue to go up, but be aware of this trend line that's drawn, and it should retest this support and resistance level down here before continuing upward. However, if it does break down below this and we get significant bearish movement, then be looking for a retest and then continuation down. Up next, EURUSD. As you can see, long-term trend has been bearish. We just got the break of this trend line last week, and then bearish confirmation off of that. The EMAs are also telling us that it should continue to bearish. The only thing with this is that there's not much history down here, so I would not be surprised if we saw some sort of double bottom coming off of this area right here. If we saw some sort of double bottom off of that, and then a complete trend change to go bullish, but that's kind of predicting pretty far in the future. So for this week, I would fully expect for this to continue to go bearish. We might see some bullish momentum up, retest this trend line again before we see it continue downward. But I'm just not convinced that it's ready to go bullish just yet. Last week was all bearish. The trend, long-term trend, is all bearish. So that's something to be aware of. I'm pretty much sold on EU being bearish this week, but I'm not gonna trade this until later on in the week because I don't generally open up trades on Sunday nights regardless. But I want to see if it does reach this zone, what it's going to do when it reaches it. If we get a strong bullish push out of this, then I would be pretty comfortable buying it. Because again, the EU has been bearish for a very long time. We'd be looking for a complete long-term trend reversal off of this zone. If we zoom out, we can see that price hasn't been this low in quite some time. There is also market structure over here. I guess I should probably label that. Market structure over here, which lines up perfectly with our zone. So if it does break that, then the next area that we're looking for is way down here, near the 1.1 area. So yeah, that's where we're at. Again, we're just waiting to see what this does. Will price react off of the trend line, which I don't understand why TradingView is doing this, but every time I zoom in and zoom out, the trend lines move around. I'm not sure if it's because when I drew them, it was on the daily time frame or the weekly time frame, and now that we're on the 4-hour time frame, they just move around. I'm not really sure, but you can tell that the trend lines have moved since I zoomed out. But we'll either be looking for a bounce off of the trend line, a bounce off of this zone, or a break and a retest and then continue falling down. Gold is up next. XAUUSD. As you can see, we're really close to that trend line that's drawn. Just to show you how significant that trend line is. It's pretty dang significant. It's been there for a long time, and we are extremely close to it. As you can see, gold is trending downward. Last week we got two significant bearish candlesticks pushing price down. It's below the EMAs. It's currently sitting just at the very bottom of this zone that I have drawn. If it breaks out of that zone and breaks this trend line down here, I'll be pretty much sold on it's going down. So that's where I'm at with gold. However, if we do see some bullish momentum coming off of this trend line, and we see it break through the zone that's drawn, then I would be comfortable buying it until we get up to this this top trend line. EURAUD is up next. As you can see, it gapped way down. I was kind of expecting that because of how significant this bullish push up has been. It's been very significant. So we saw this large, that's a very large opening gap, and it looks like we might see some bearish momentum this week. However, I would not be selling this until we get some sort of confirmation that it's okay to sell it. So that's a significant gap down though. That's crazy. So almost the entire week last week, all that the bullish momentum pushing upward, once it opened, it opened to where last week opened at. That's crazy. So this trend line is pretty significant. The arrows kind of tell the story in this. This is very bullish, but we are looking for some sort of retracement on this because it's so significant. The push up was so significant, it was so rapid that we have to see some sort of retracement. Wait for bearish confirmation before selling this. If you're going to sell the retracement, if you're not going to sell the retracement, if you're a more conservative trader, Fibonacci retracement, open that up and watch it react to the Fibonacci levels as it comes down, and wait for opportunities to buy on that. Let's see here. GDP NZD is up next. As you can see, GN is currently in a zone as well. So what we're looking for with GN, as you can see, it's been bearish. I would not be surprised if that continued to be bearish. The trend line is relatively close. That's why I zoomed out so you can see where the trend line actually was instead of where it appeared to be. The trend line is relatively close to where price is at, that bottom trend line. And yeah, so I would anticipate for price to reach that trend line. It's still staying below the 2 EMAs. I want to see how it reacts to this trend line and whether it bounces off of that. If it does break that trend line, we'll be looking for a break and a retest of that trend line before selling it even farther. GBPJPY, GJ is up next. As we can see, GJ gapped up today. Didn't gap up much though. So with GJ, we have a lot of significant movement down. I was compelled to draw a trend line showing this movement down, but the EMAs act as a trend line on this, and so I'm not gonna draw a trend line because it's a pretty steep downward climb. However, we are getting a reaction off of the trend line that's drawn. There is a support and resistance level right there as well that you can see price reacted to. Kind of what I'm looking for with this is the same thing that I was looking for GN. We're looking for a retracement. And so I'm not saying buy it right this second. We want to see confirmation, whether that's a double bottom right here or something along those lines. That's what we're looking for. We're looking for some sort of bullish confirmation that it is going to retrace before it continues downward. I wouldn't be buying this long term unless we break levels up here though. So we're not looking for long term buys. We're looking for maybe take it just a week at a time. And use Fibonacci retracement. Again, if you're a conservative trader, you are not looking for buys, you're looking for opportunities to sell, so you wait for the retracement to react off of a Fibonacci retracement level, and then you'd be looking for opportunities to sell based off of the retracement. AUDNZD is up next. Another huge gap up, very large gap up, so it engulfed all of last week. That's pretty crazy. So what we're looking for here, as you can already tell, it already reached where I had drawn this arrow to go, or pretty much, which is just insane. So unless we get large bearish candlesticks to start the week out, it looks like we're looking for opportunities to buy. There is the whole concept of, oh, well, it's got to fill the gap. It's got to fill the gap. It will more than likely fill the gap, but it doesn't have to be this week or next week or the week after that or the week after that. So a lot of people have it in their mind that gaps get filled within a day, and that's not always true. It does happen more often than not, but it's definitely not always true. So I know a lot of people were looking for opportunities to sell off of the open of this. If you did sell and you sold quickly, then you just got in and out, scalped that, then good for you. But long-term opportunities, intraday opportunities aren't here yet. So we're going to wait to see at least until tomorrow morning, see what the first few candlesticks of the week do on AN before we decide to do anything. I am bearish on this pair. I think this should continue to go down, but we're waiting for the break of the trend line. And really, I'd like to see a break of this support and resistance level, the one at 1.05. EG is up next. Another one that's got just huge, massive movement upward. I do expect some sort of retracement with EG relatively soon because of how much just crazy momentum upwards we've been seeing. Did gap down a little bit, not too tremendous. Again, if you're a conservative trader, you'd want to draw a Fibonacci retracement off of this and wait for a reaction off of the Fibonacci retracement levels. If you're an aggressive trader, wait for selling confirmation, wait for bearish confirmation, and then draw your Fibonacci retracement and sell down to wherever it reverses from, whichever level that is. AUDJPY is up next, and this will be our last pair for this week. As you can see, kind of the same story. So AJ has been trending downward for quite some time, for multiple weeks. It gapped way up above the EMAs that it hasn't gotten up above and stayed above for many weeks. But it hasn't broken above this support and resistance level, so that's kind of what I want to see. If I'm going to buy this and buy the retracement, I want to see it break up above this 76.2 level and then come back down, retrace or retest it, and then continue upward. Again, if you're a conservative trader, you should only be looking for sells on this. If you're an aggressive trader and you're wanting to buy the retracement, try your Fibonacci retracement level, and then wait for opportunities to close based on the reactions to each of the Fibonacci retracement levels. So I've taken enough of your time. Thank you everybody that has continued to support me, that it was just wondering what happened. I do apologize for not being more vocal than that or about that. Life kind of just hit me in the mouth, and I had to react the way that I did in order for me to be looking out for my future. So hopefully everybody understands. Again, this is Trader Judd. I am signing out. I hope everybody has a great week. Peace.